With global policies all sprinkling sugar, will Bitcoin reach 120,000 again? Only 13% profit in the short term. Bitcoin's market share has fallen for 4 consecutive years. Has the copycat season really begun? Ethereum has finally become the second largest ETF after 10 years of being the second largest ETF money and rubbing Big Brother Bitcoin to the ground. Anonymity without hiding. MiPay, the regulation was negotiated. From quantum threats to $5 billion sell-offs, why is the Bitcoin community always killing each other? Behind the global central bank's gold rush, Tether is playing a big game.
July 28th, Monday, BitcoinTV English channel. Where is the coin chain? I am Michael. Let's start with the 24-hour headlines of the coin circle. The US and Europe have really reached an agreement this time and have unified a 15% tariff, finally not slapping each other with random tariffs. The EU is also going to throw $6,000 at the US billion investment, plus purchase $1,500 billion in energy and arms. With a wave of his hand, the global market immediately stabilized, and risky assets breathed a sigh of relief. Asia is also restless. The Korean political arena is directly staging a legislative race. The opposition party has just submitted a stablecoin bill, and the ruling party immediately followed up. The Korean won stablecoin is likely to be officially licensed. Looking at this situation, South Korea may really be leading the trend of compliance in Asia. As for the Federal Reserve, the CME data is here. There is a 97.9% probability that interest rates will not be adjusted this week. The market has long been accustomed to it. The point is that the hope for a rate cut in September has risen to 62.4%, and investors are already secretly happy. This wave of expectations that money will become cheaper also makes the bottom of Bitcoin more solid. Sure enough, Bitcoin rebounded as soon as it was said, holding the key position of 116,000 and rebounded directly to 119,000, and the technical side has stabilized. If it rushes up next 12 tens of thousands of dollars, don't be too surprised, there is really hope. Looking at the data in July, well, Bitcoin's Big Brother status is a bit unstable, and its market capitalization has dropped from 64.9% to 60.1%. Although its price has rushed to $120,000 several times, it feels that the momentum is not enough, and the funds have not kept up. It is obviously a bit tired of rising. At the same time, Ethereum is in good shape, and its market share has risen to 11.8%. Other altcoins are not idle either, and together they have accounted for 28.1%. This shows that the market is rotating, and funds are beginning to move slowly from Bitcoin to other currencies. But don't panic. This situation is not a prelude to a bear market in history. Instead, it is a landmark move in the midterm of a bull market. Everyone has turned from low volatility large cap coins to more elastic mainstream altcoins, hoping to get a higher return. In addition, ETH's ETF has been attracting money recently, and stablecoin transactions are also super active. The on-chain data are shouting, "Brothers, the mainstream altcoin season is here." If it really falls below 60% of Bitcoin, if the market is more than just warming up, it may be a full rotation. Next, we should focus on ETH and other mainstream coins with good quality but not much growth, which may be the protagonists of the next wave of market. On-chain data shows that short-term players who hold Bitcoin for 1 to 3 months now only make an average of 13% on paper. What does that mean? In the past, when the bull market was crazy, these people would easily make 150% or even 200% of floating profits. Now, this little bit of profit is not even satisfying. So you don't see large-scale selling pressure in the market, because who is willing to sell if they haven't made enough money? Short-term players are quite Buddhist, which leaves room for the market to go up. In comparison, in March this year, their profit rate was as high as 69%, but now it has fallen, which shows that retail investors are now more rational, unlike before when they get on the bus as soon as the wind blows. However, this state has two possible directions. If Bitcoin suddenly breaks through its historical high, hey, then FOMO may be online in a second, and short-term funds will immediately rush in to add fuel to the flames, and it may rise sharply. But if the market turns around and these people go from small profits to small losses, then you have to be careful, because they may reverse and dump the market to stop losses. So now the focus is to see if the profit rate has changed and whether there is a marginal change in market sentiment. Once the wind direction changes, the rhythm will follow. Please like and follow us to sort out the latest developments in the cryptocurrency, blockchain, and mining circles within 24 hours. Click the small bell to join the channel and become a member. You can get the member wealth password from Monday to Friday. The biggest news in the cryptocurrency circle recently is not which big shot has blown up its position or which project has run away, but a data that makes everyone drop their jaws. The inflow of funds from Ethereum ETF has actually driven down Bitcoin. You heard it right. It is the eternal runner-up that has been suppressed by Bitcoin for 10 years. Now, relying on the ETF ticket, it has actually pressed the big brother to the ground in terms of money-making ability. The daily inflow of Ethereum ETF can soar to billions, but Bitcoin is like a deflated ball, and the net outflow of funds has almost become the norm. In fact, after the Bitcoin Spot ETF was listed last year, it has allowed institutions to directly buy crypto assets. It stands to reason that companies no longer have to take the risk of writing coins into their books. However, the latest round of announcements shows that demand has increased instead of decreased.
In the past 6 trading days, the Ethereum ETF has a net inflow of nearly $2.4 billion, far exceeding the $827 million of the Bitcoin ETF in the same period. A new article in Forbes reveals that companies claim to spend billions of dollars to buy coins, but the actual operation is often arranged differently. In most cases, the company did not take cash to the market to buy, but let internal executives, early investors, or contacts contribute their holdings to the company through over-the-counter transactions. The company thus obtained encrypted assets and issued a grand press release.
One is, a lot of these ETFs may have been receiving in-kind exchange. So people have their crypto keys, give it to the ETF provider, and then they just stepped up their basis. So that's not going to push up the price of Bitcoin. It adds to their AUM.
It's a wash.
Yes, it's a wash. And the second is that the ones who aren't involved in ETFs, but maybe they have $10 Bitcoin. We have clients that have bought Bitcoin at $100, and now it's $100,000. They're not looking to, they don't care if Bitcoin goes to a million.
In the past, Bitcoin accounted for at least 80%, and now Ethereum's share has quietly climbed to more than 40%. This counterattack is not just luck, but a real triple crit A. The regulator suddenly gave the green light to catch institutions off guard. The staking interest function made big investors exclaim that it is really good, and the technical upgrade has reduced the transaction fee to the price of milk tea. The transaction volume of Layer 2 took off directly, soaring 217%, which is even crazier than the bull market. However, old leaks all know that there are several pitfalls hidden in this market, and Grayscale's ETH still on sale. The US SEC eyeing the pledge function, the exchange rate is stuck 0.058. The key position is like a fishbone stuck in the throat. Whether this counterattack of Ethereum is a real market or a false climax, we will have to wait and see. Have you noticed? Crypto assets have risen rapidly in recent years, but when it comes to cash withdrawal, everyone has a headache. The card is often frozen, the credit limit is pitifully small, and cross-border transfers are as slow as dial-up internet access. It is simply the big cash withdrawal problem in the currency circle. At this time, MiPay appeared like timely rain, directly connecting the assets on the chain with our daily card consumption. I have basically thrown my credit card aside now, and I rely on a matching card to go out. For example, if I need money temporarily and want to buy something, I just need to swipe some cryptocurrencies from my wallet, and it will be charged to the matching card in a few seconds, and I can swipe it when I turn around. No need to wait, no need to fill out forms. It's so good. To put it bluntly, MiPay is not only a tool, it is also the ultimate channel to turn wealth on the chain into money that can be spent in real life.
MiPay, as the core payment component of decentralized finance, has just completed a 72-hour full-stack upgrade and officially entered a new era of compliance without real name. This time, the upgrade reconstructed the underlying cross-border settlement engine, integrated the anti-money laundering interfaces of 7 countries for the first time, achieved perfect compatibility between regulatory docking and system performance, and compressed transaction authorization response to sub-second level. More importantly, MiPay, the original zero-knowledge proof and data sandbox mechanism, creates an absolute privacy shield for users while ensuring regulatory compliance, truly achieving a double breakthrough in technology and privacy.
Now, MiPay it has been reinstalled and launched. The official announcement has not been made yet, but everyone can use it now. You can download it directly from the Apple App Store. Android Brothers will also be available on the Google Store in a few weeks, or go to MiPay, find the 24-hour customer service in the official community to install the package. I emphasize 2 very important points that everyone must remember. First, the MiPay is not a wallet. It does not earn you interest when you put money in it. Do not use it as a piggy bank. MiPay is a tool. It can be used for consumption or to convert you into legal currency in a legal manner. Second, use it as a consumption tool. For example, my card has a limit of 5,000 and I deposit 5,000 go in and prepare to spend. Remember, once money is deposited into the card, it is already in MasterCard. The settlement library is no longer in the hands of the secret partner. So, once again, don't use it as a wallet.
Institutionalization versus decentralization. Is Bitcoin experiencing an identity crisis? When the central bank meets blockchain, what does it mean to put $800 million worth of gold on the chain?
The Bitcoin community has been in an uproar again recently. This time, it is not because of the fork or the handling fee, but because the future killer of quantum computers has turned Satoshi Nakamoto's millions of Bitcoins into a time bomb. Old school players insist that decentralization is sacred and inviolable, while new school players are shouting, if you don't upgrade, you will be wiped out by quantum computing. The 2 sides are fighting on Twitter more than Bitcoin K. The line is also exciting. In June, a core developer directly stirred up a hornet's nest with the words technical neutrality and was criticized for opening a backdoor for data crimes. What's even more magical is that even an emoji coin like Dogecoin can split the community. Old leaks think it is garbage, while new leaks regard it as a treasure. Recently, the well-known trader, Wolf of the Street, can cause the 2 sides to fight again with just a tweet.
The Wolf of the Street. Recently, HKEX, the platform, broke the news that early Bitcoin whales have begun to waver in their beliefs and are selling their holdings. Although Bitcoin is amazing, it is being used by the people who created it to hedge risks. This statement immediately caused an uproar. Melker urgently clarified that this is just a market observation and not a personal opinion, but the community is already in an uproar. Is the institutionalization process deviating from the original intention of Bitcoin's decentralization? This debate directly points to the most fundamental value: conflict of cryptocurrency.
You fail to understand that it's a new technology that is as profound as the printing press or the electric light bulb. You're comparing it to things that you shouldn't be comparing it to. It makes no sense. You're talking nonsense.
Yeah, this is...
Okay?
Look,
it's a brand new breakthrough in technology. Your kids are going to be wondering why their dad didn't see the value. They'll be like, Dad must have been on drugs because he never saw the value.
This debate continues to ferment, and opinions from all sides clash fiercely. Mike Alfred, founder of Alpine Fox, directly said, "There are thousands of reasons to sell coins, and it has nothing to do with asset quality." Bitcoin veteran Dave Weisberg insisted that without institutional entry, Bitcoin will always be a niche toy. CryptoMags even issued a declaration saying that Bitcoin never says no. Whether it is the enemy, the government, or Wall Street, it will accept everyone.
To put it bluntly, this debate is the midlife crisis of Bitcoin. On the one hand, it wants to embrace the big funds of institutional fathers, but on the other hand, it is afraid of losing the original intention of decentralization. Just when the two sides were arguing fiercely, big news suddenly broke out that an early big man Galaxy Digital 80,000 bitcoins were sold in one go, which was almost $5 billion US. It directly set the record for the largest single transaction in the history of the cryptocurrency circle. This fire is really getting hotter and hotter. But to be honest, Bitcoin has never been a black and white thing. It needs to have both idealistic, technical cleanliness and make a living in the real world. Although the entry of institutions makes old players uncomfortable, this may be the only way for Bitcoin to grow up. As the big guys in the circle said, Bitcoin is now like a young man who has ended his rebellious period and is learning to reconcile with the real world. Although the process will be a bit twisted, it is harmless. When the global economy encounters black swans flying all over the sky, gold, the 1,000-year-old safe haven, is back. Central banks of various countries are simply engaged in a gold spree. In 2024, they bought 1,136 tons, the second highest in history. In the first quarter of this year, China, Poland, and Turkey accounted for more than half of the purchases. Institutions are not to be outdone. Billions of dollars poured into gold ETFs in the second half of the year. In the first half of the year, 380, the inflow of $1 billion US directly broke the 5-year record. The most eye-catching thing is that even the crypto community has come to take advantage of the popularity, and gold stablecoins such as Tether Gold, XOT, have taken the opportunity to make a fortune.
Tether Gold stablecoin issued XAUT. One coin is equal to 1 troy ounce of gold, and 400 ounces are required to exchange for physical gold. Its gold reserves are stored in Switzerland, in accordance with London standards, and are regularly exchanged by BDO Italia Audit. 2025 year Q2, circulation 25.910,000 pieces, approximate 7.66 tons of gold. Market value exceeds $8 billion. Combining the value-preserving properties of gold with the portable and divisible properties of Bitcoin, one annual price increase 40%, the trend is synchronized with spot gold.
Central banks are hoarding gold like never before. In each of the past 3 years, they've added more than 1,000 tons to their gold reserve, and that's unprecedented. And now in 2025, the buying has only continued.
Why are people so obsessed with gold? To put it bluntly, they want to ensure their foreign exchange reserves. The credit of the US dollar is a bit weak now, and it is more secure to put eggs in different baskets. Moreover, gold does not depend on the face of any country, and its ability to preserve value in troubled times is beyond doubt. Tether Gold seems to have a lot of room for development in the future. On the one hand, global central banks and ETFs are still hoarding gold, and the market demand for gold will always be high, which is a good atmosphere for Tether Gold. On the other hand, the cryptocurrency market is gradually maturing, and people are becoming more and more familiar with digital asset investment. Tether Gold's operation of combining gold and digital currency is simply stepping on the cusp of the times. Let's see if it can continue to lead in the future.
On July 28th, CCTV released a late-night news program, CCTV 13's Late Night World Weekly column, which suddenly popularized the concepts of Trump coin and WLFI. The stablecoin circle instantly went viral. Is this an official hint or just a coincidence? Beijing Haitian Procuratorate arrested a group of coin movers who used Bitcoin to evacuate 140 million yuan, about $20 million US, from the company's treasury. The main suspect was a Kuaishou employee. Netizens, It is recommended to change the name of the app to Quick Money. US President Trump announced a 15% tariff on EU goods, but then took over $600 billion investment and $750 billion energy orders from the EU. Netizens. This wave of tariffs is a great way to get the wool. Gallup's latest survey from June 2nd to 15th shows that 14% of American adults hold cryptocurrencies, but the remaining 86% said, "Don't try to trick me into getting in the car." Vitalik recently retweeted on the X platform, saying that Facebook lie flat 14 hours, Cloudflare when 19 computer room keys were thrown away, Ethereum, the worker, had been fully present for 10 years without taking any leave. Netizens suggested changing the name to Ether Scroll.
Okay, the above is the main content of today's program. Our channel focuses on valuable news in the currency circle, chain circle, and mining circle. There are news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow it. You can also become our member and receive the member wealth code from Monday to Friday. Let us become rich together and add a zero to our assets in the bull market. See you tomorrow.